Hello, we are the Fair Political Practices Commission, or the FPPC, and we would like to welcome you to our video series for Form 700 filers. This module will discuss how to complete Schedule D, which discloses income in the form of gifts. Please note that advice can be fact-specific, and that you should not rely on this video alone for help. We are available by phone or email if you would like to contact us directly with your questions. Additionally, there are several other resources which we will be discussing later in this video. Also note that during the video, we will refer to both the Form 700 and the Statement of Economic Interests. These are in fact the same document, but in general, the Form 700 is the form before it has been completed, while the statement is a completed form. To get to the Form 700 page on our website, start at our home page and click on the box that says File a Form 700. The page that opens not only has a link to the form, but to other resources that we will be discussing during this module. Supplemental materials, such as the reference pamphlet, the Excel form, the gift and travel fact sheet, and amendment schedules can be very helpful to you when completing your statement. The Political Reform Act defines a gift as something of value for which the public official did not provide equal or greater consideration. More simply, a gift is something of value that costs more than what an official did to earn it. Because gifts can influence decisions, officials are limited in the amount of gifts they can accept from a single source in a calendar year. The gift limit is noted on this slide and at the very beginning of the instructions on the Form 700. In general, it increases $10 to $20 every 2 years. Please note that gifts from lobbyists are more restricted than those from others, and that they are tracked monthly rather than annually. Officials filing assuming office statements are not subject to the gift limit for the time before they assumed office, but they must report all gifts received in the 12 months prior to assuming office. Once officials assume office, however, they should remember the limit and track gifts from all sources so that they do not exceed the limit. In fact, all officials should track and report their gifts. Accepting gifts that exceed the limit and/or not reporting gifts is a violation of the Political Reform Act, and FPPC's Enforcement Division will fine officials for these infractions. If after accepting a gift, you discover that its value exceeds the gift limit and/or that you should not have accepted it, or perhaps you don't want to disclose it, you may return it within 30 days of receipt and you do not have to report it. To help you keep track of gifts you receive throughout the year, we encourage you to download our gift tracking app to your smartphone. A final point about gifts: this training module provides a great deal of information on gifts disclosure, but these questions are sometimes complicated. If after watching this video, you are not sure if you should accept a gift, or if you're not sure if you should report it, please see the instructions on the Form 700. Many filers also find our gift and travel fact sheet very helpful. Of course, FPPC staff are always available to help too. Due to the complicated nature of gift questions, it is recommended that you send them in writing to advice@fppc.ca.gov. We also recommend that you send your questions before you accept the gift. Please note that for gift questions, it may take 2 to 3 business days to receive a response from our advice team. As the title of the schedule indicates, Schedule D is where you will report gifts that you receive during the reporting period. Because public officials often receive gifts, and because these gifts can create a conflict of interest for officials, FPPC treats gifts as a special type of income. These interests have their own schedule on the Form 700 so that the public can easily see who has been providing gifts to public officials. For a gift to be reportable, it must have a value of at least $50. Alternatively, a gift is reportable if a combination of gifts from the same source has a total value of $50 or more. Unlike other reportable interest on the Form 700, there is no jurisdictional boundary for gifts. Thus, public officials must disclose gifts from reportable sources even if the source is from outside their jurisdiction. Please note that for gifts to be reportable, it must come from a source that is reportable per your agency's Conflict of Interest Code, and you may find that your code narrows what you must disclose. For training purposes, this video assumes that your gifts are reportable per your agency's Conflict of Interest Code. For more information on how Conflict of Interest codes may limit your disclosure requirements, please see our Need to Know video. If you are filing an annual statement, you must report gifts and loans that you received in the last calendar year. If you are filing an assuming office statement or a candidate statement, you should report gifts and loans received in the past 12 months. If you are filing a leaving office statement, you must report gifts and loans that you've received since you filed your last annual statement. Take a moment to review the gifts disclosed on this slide. These are common types of gifts that officials receive, and this is how they should be reported. Note that in the first example, the filer received a lunch from the source and that the lunch did not meet the $50 threshold. The filer also received a fruit basket from the same source, but it did not meet the $50 threshold either. However, because both gifts came from the same source during the reporting period, and because their total value was $55, the filer is required to disclose both gifts. In reviewing the gifts disclosed in the example, you will also note that the total value of all the gifts combined goes well above the current gift limit. While an official may accept gifts from any number of sources during the reporting period, the value of gifts that an official may accept from a single source is limited. For example, an official may accept 4 lunches from a single source so long as the total value of lunches does not exceed the gift limit. And the same official can accept tickets to a sporting event from another source so long as the value of the tickets does not exceed the gift limit. Together, the value of the lunches and the tickets does in fact exceed the gift limit, but because the gifts are from different sources, the official may accept them. This slide shows various types of reportable gifts that you may have to disclose. The list includes things that you normally think of as gifts, such as food and tickets or passes, but it also includes things you might not think of immediately, such as discounts or rebates. An example of this might be a Caltrans mechanic who receives a discount from the shop that services his personal vehicle because the owner knows the mechanic through his contract with Caltrans. If the shop owner provides a tune-up on the mechanic's personal vehicle for $100 less than he would charge other customers, the mechanic would report that $100 as a gift on his Form 700. As you go about your daily business, remember that a gift is anything of value. If you are receiving something for free or at a discount, you should ask yourself if it is a gift, and if you have to report it, and does it exceed the gift limit. A note here about wedding gifts. Wedding gifts from reportable sources must be disclosed, but they may exceed the gift limit. When reporting wedding gifts, the filer must report half the value of each gift from a reportable source because only 1/2 of each gift belongs to the filer per California law. Fortunately, there are many types of gifts that are not reportable. The bullets listed on this slide and the next note exceptions to the gift reporting requirements. Please take a moment to review the list. In reference to tickets or passes, you do not have to report them as a gift so long as you do not use them or give them to someone else. If you give the tickets or passes away, you must still report them, even if the recipient does not use them. If you receive informational material, such as textbooks or even registration to an educational conference, it is not reportable. This slide lists additional non-reportable gifts. The last bullet is important as it mentions an exception that allows for officials to accept gifts from sources who would otherwise be reportable. The limitation is that the official can only accept gifts from these sources if their personal relationship existed before their professional relationship, and only if the giver is not trying to influence the official by offering the gift. This exception can be tricky though. If you think it might apply in your situation, you may wish to verify it with our email advice team. After reviewing the non-reportable gifts on these slides, you may find that you don't have to report any gifts. Our gift and travel fact sheet lists additional non-reportable gifts and provides details on these gift exceptions. When reporting gifts, you must disclose the name of the person or entity who gave you the gift, the source, as well as the source's business address and business activity. You must also provide the date you received the gift, the fair market value of the gift, and a brief description of it. Please note that the fair market value is what any member of the public would pay for the item. For example, maybe your good friend works at a basketball stadium and occasionally gets free tickets. One month he gives the tickets to you because he can't use them. Even though your friend did not pay for them, you would have to report them as a gift, and you'd have to report the value as what you would pay for them if you bought them directly from the stadium. The hard copy of the Form 700 has places to report 6 different gifts. If you have more than 6 gifts to report, that's good news for you. In that case, you can either copy the schedule as many times as needed, or you can report the gifts on the Excel version of Schedule D. Electronic filers do not have to use the hard copy of Schedule D nor the Excel form, as the system will allow you to add as many gifts as needed. We hope that all filers will take advantage of FPPC's gift tracking app that you can download to your smartphone. The app allows you to log your gifts as you receive them throughout the year. The gift tracking app is also compatible with the FPPC's e-filing system. If after submitting your completed statement, you discover that you've made an error or left off a reportable interest, you should amend your statement as soon as possible. You do not need to complete the entire form again, only the schedule or schedules where there are errors. Amendment schedules are located on the Form 700 page. After you complete the amendment, return it to your filing officer so that it can be attached to your original statement. Please note that your original statement will not be discarded. If you have further questions on completing your Form 700, we are available to help. For questions on what to disclose or how to disclose it, call us at the number above or send us an email. If you are having technical problems with your agency's e-filing system, please contact the filing officer at your agency to see who provides support for your system. If you are having technical issues with the FPPC system, please send an email to the address noted on this slide. This concludes the training module on Schedule D of the Form 700. We hope that you will watch our other videos for Form 700 filers to learn about other schedules. Please note that you may want to complete the Form 700 cover page last, so you'll know which schedules to attach to your completed statement. Thank you for your interest in FPPC training.